Well, hello, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we're doing it from a neoclassical perspective. Each time, we're asking ourselves what happened today. What does it tell us about the coming ones? Do a show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel L.A. Little. If you haven't subscribed and you want to, just reach up in the right-hand corner and do so. Anytime I push content, you'll get a notification. Good, easy, cheap, matter of fact, free way to stay up with what's happening. As far as what's happening, if you look inside these indexes, and I went over them all here before I came on, you wouldn't be able to tell that we're going to get a retrace. Yet Apple misses. That's 3 for 3 now in the big cap techs. Microsoft, Apple, Google, they've all missed now, and they've all sold off as a result. But if you look at these indexes, which we'll do here in a second, you're going to wonder, is like, how in the heck are they going to sell off? Russell up over 1% today. The S&P wouldn't give anything back either. If you go down the list here, the NASDAQ and the NDX were the only ones that were down. NASDAQ just slightly, NDX down 0.5%. Tomorrow they're going to hit. The NDX and the NASDAQ going to get hit, and that's off Apple because Apple's such a huge weighting in those indexes. But if you're looking at it here tonight, you certainly can't see it on the surface of these numbers. DAX down a little bit. You got the Fed tomorrow. You got the Bank of Japan tomorrow night. You had the Nikkei slightly down. Bonds slightly down again, or actually down a decent amount, 0.5%. The oddity here was gold and silver. Both of those guys pushing higher. Silver not so much an oddity because we've already talked about the breakout on multiple swing points there. That should drive that higher short term, which is what it's doing. So if we move to the charts and take a look at them, I'm going to start over in Asia because the two trouble spots in Asia is Shanghai and Hong Kong markets. And I'm going to show you these two markets because if the Fed does make a move tomorrow that moves the currency, the dollar, to any extent, these markets are going to be affected. And right now, these markets are suggesting they're going to try to move to the downside here. You got this big bar down, right? Volume expands, right? Now you just kind of hanging down there. If you go back and look, right, this is a retest and regenerate attempt off the prior swing point highs. Now it's the second time down. You had one here and you had another one there, right? You hit it with volume here compared to this, and compared to the breakout bar, it was decent volume as well. As you come back, the odds increase that you potentially can break it. And so now the question is going to be, is this going to break down and trade back into these ranges? And so if we draw the ranges in, you essentially have this higher range. You kind of got a mid-range inside there, and then another one at the bottom, right? And so the question is are they going to break down into the range? And if so, if they stay there a little while, then they're going to try to hit the bottom and potentially on down into the lower range. So I think if you're looking at Asia, you got to be watching Shanghai and saying, okay, what the heck is going on in China? And is it going to correct itself, or whatever it is? If you look at it on the weekly, it's the same sort of story here. You can't argue that this is bullish. If anything, this is bearish. You're coming into a swing point low, right? You're also already into the larger swing point low. As you come into that, the first time back within 6 bars, or excuse me, after 6 bars, that has a high probability in the neoclassical literature that I've written. This has a higher probability when it finally gets back here to return, regenerate back in the direction of the break. And what was the direction? The direction was down. The attempt is to take it down again. So China looks like a problem to me, has looked like a problem, still looks like a problem. Moving over to Hong Kong. Now the Hong Kong is pegged to the dollar, and just as China is, and that's an issue for them and has been an issue for them. You got a nice break higher here on the daily, volume on it. You haven't come back to test yet, and so if I'm looking at Hong Kong proper, Hong Kong looks like it can come back, do a full retest, and try to regenerate higher if in fact it's going to come back. Now, if we look at it on a weekly basis, right, the story's slightly different, and that is that you're doing a full retest, bearish retest, and an attempt to regenerate lower. And so the real question on Hong Kong is it going to get over this bar or not and stay over it? If it does, it will change this trend, right, from that direction to probably more of a sideways direction. But you got to get over it. And so far it hasn't been able to. And if you go back and you look at it from the prior one, you had the exact same setup here. What did it do when it came back to it? As it came back, right, regenerates back to the downside. Is it going to be the same case here, right? Is it going to regenerate or not? Hong Kong, Shanghai, if you're looking in Asia, those are the problem spots. Now the Nikkei is going to be another one that's interesting because of the Bank of Japan. And that one's pushing up. It's over a swing point high. But if you bring it back to the weekly is this bearish retest region. And you can see how we're talking about bearish retest regions on Asian stocks. If this one also does the same sort of thing, now it has a better chance because it came back within 6 bars. This is the second test, which gives it a better odds of trying to break. Is it going to regenerate lower or not? Come back down here and test this wide price spread bar. And it certainly tests into the bottom of, the top of the low, potentially all the way to the bottom. That's Asia. Europe looks different, right? Europe actually looks the opposite. And Europe actually looks like it wants to go higher. And the reason is that, you help Europe, you hurt Asia. You help Asia, you hurt Europe. This looks like it wants to test into this area at best and then regenerate higher. I'm on a daily time frame here. This is 6 bars now. So the first push back after 6 bars has a high probability of trying to regenerate back to the top side. That's on your daily chart. If you look at it on the weekly, the swing point low here that was broken, it got over it. And remember when that happens, right? So if we go back and look at it, this was the bearish retest regen, got over it, dilly-dallied around, and now has pushed above it. And what that says is just what we were just saying in Asian. The trend that was this way, once you get over it, makes it more like this. And that says it can try and climb higher. And so you've got a breakout now on the weekly time frame as well. This swing point high was broken, that one there, as you went over it. So that is now the bullish retest regen if you're looking at it from a weekly time frame. And so a retrace into that area, although it could come to the low, right, given what we just saw on the daily, it probably won't. DAX looks like it wants to go higher, and that's true of the CAX. It's got almost the same sort of setup. And it's also true of the Swiss market, right? The Swiss market's trading back into a swing point high. And it looks like it's going to try to push a little bit higher as well. This one has more work to do. It pushed into this high volume low. And so I suspect the Swiss market's going to continue to trade worse than the German and French markets. But there is something going on here in the European markets. And what would that be? Well, if the euro trades lower and the dollar higher against it, that could put some juice back into these markets. And that's going to be dependent on the Fed tomorrow. Let's move to our markets. I started with the world markets because, if you look at our markets, you're not going to see anything. There's absolutely nothing here on the charts that would suggest that anything's going to happen tomorrow, except for the fact that after the bell, we know the NASDAQ and the index have sold down hard. Here's the swing point high. And so there's places now that we can measure as this thing comes back. And for example, here on the S&P 500, this would be the bullish retest regen zone. It's tested it already once right here on this bar. And so as it came back in, and now will probably come back in some more again tomorrow, that would be the second test of that area. That suggests it will probably get a little deeper. You got swing point lows back up underneath here. You don't show it here. I can bring this chart over though. The MTTF is rather extended at this point. This is one of the things I was telling the members this weekend that suggested that we probably would get a retrace this week. We're starting to get extended. That says that more than likely you're going to have to break a swing point low. Where are they? Well, they're back down here, and they're right up underneath this retest regen area. So I would expect that these bars are going to see some interesting push to try to get into them. And if they do, and if we actually close down here, that would break this. And what does that do? Well, it's the opposite of what we were just talking about. This no longer would be that, but would be more like this. And so that's the way that sets up, and that's what we're going to want to watch. If you pull it back, look at it on a weekly. I've talked about this in articles already. I've talked about it many times to members. You have an almost identical pattern that has formed right in these indexes. It's eerily identical, right? Exact same, tails at the top, all of that, right? Then you get the wide price spread volatility consolidation. Question is that what we're fixing to get? I'm going to leave it at that tonight. I think that's the key spots. That's the key things you should be looking at. If we look at the NDX, I could give you ideas of where it should come back to, but I'll save that for the members. If you want to be a member, just join us. It's so cheap, you can't believe it. Even Donald Trump would think this is ridiculous, right? If I pull this over here, you get all these things, right? These are the various things that we have. We have a TA Today bundle package, $175 a year, $19 a month, $15 a month if you're doing the yearly. You get all this stuff. Everything's included, folks. Unlimited access to all of it. And then if you want to manage your own retirement, I don't talk about this all that much, but for a nominal fee, $120 a year, $10 a month, you can monitor my portfolios. They're long term. They don't change very often. They keep you out of the market when it's risky, and they keep you in the market when it's not. Great deal. Check it out. Join me. Take care. I'll see you next time. Good night.